Hello, everyone. Welcome. And thank you for joining us today. I am your host, Rashmi Chanduraj, founder of Oxstone Capital Partners. And I am so excited to guide you through today's session on scaling commercial real estate, where you'll get a sneak peek, learn what's behind the scenes from Veena Jetti. You've, if you've invested in real estate deals before, especially through syndications, and you're wondering what really goes on, managing, growing those deals like at scale, you're definitely in the right place. This session is all about sort of lifting the curtain and giving you the first-hand look at what it takes to build truly scalable, high-performing real estate business. And to help us, we are here joined by none other than Veena Jetti. She's the founding partner of Weave Funds, a commercial real estate firm known for, curating, I want to say, conservative investment opportunities, with nearly over like a decade of industry experience. And she has more than $1 billion in multifamily transactions under her belt. Weena brings, not just a dynamic sort of a system-driven approach to scaling these portfolios and sort of managing the risk. She's raised over 50 million in equity in just like 8 weeks. Like that is mind-boggling. For those of you who are in, raising capital will understand that, and lead sort of operations across such a diverse asset class and, widely sort of recognized really for her leadership and, execution and large scale sort of multifamily investing. She's also sort of sought after and a thought leader in the space. She's combined sort of, like the best practices with, using cutting edge technology to create sort of efficient investor aligned operations. Today, she's here to share those real stories behind that success, right? What's worked, what's been hard, and what we can take away to make us all better, sharper, more informed investors. So let's get into it. Veena, welcome again.
Hey, thank you for having me. I'm excited to do this.
Yeah, no, let's jump right in.
Let's do
Now,
it.
awesome. Well, Veena, like those headlines are impressive. Like 1 billion in transactions, scaling, I'm sure it's scaling teams, raising like tens of millions in equity. Like it's incredible.
Yeah.
But just for the investors joining us today, uh, what's even more valuable is obviously for them, like understanding how this growth happened, right? Like what is that journey before the scale? And what strategies really sort of moved that needle for you?
Yeah, it's funny because I started my career I graduated from college in 2007. So it's
Yeah,
been, a little bit of time, right, since I've been in the
yeah,
workforce. I left corporate America in
yeah.
2012 to start investing for myself. And now that I'm looking at where the world is today in 2025, and up until like 2023, I would get questions like, what would you do if you could do it all over again? And now everything has completely changed in the last 18, 24 months, to the point that I would say the advice I would give someone starting now would be completely different than if I were going and starting back over in 2012. And the
Sure.
reason is because we've been so disrupted now by AI, and
Hmm.
no one had that technology before. And so now I would say that in order to scale to $1 billion in transactions, in order to get to, like, we've raised a little over $400 million across our assets, to get to that level of scale, you don't need the same tools, resources, or teams that you had in 2019,
Yeah,
2020.
yeah.
Now you can use AI and stay like fairly lean in how you're scaling up. So for the next $1 billion in transactions that we do, I don't need to scale my team at the same rate that I needed to get to the first billion.
That's fair. And
So
that's, I mean, obviously such a change in that decade, isn't it?
oh my gosh, Crazy.
Yeah,
I wish
yeah.
I wish I started in this environment 'cause it's so much easier.
True, true. It's definitely a different conversation getting into the AI, component of it,
Yeah.
right? Like in today's day and age, like there's still, given that it's so new, and
Yeah.
people are still sort of adapting it, there's just lot, to be able to just sort of consume and, figure out how you can incorporate it into our day to day. But that's definitely, probably we'll have to host a completely new, session
Yes.
just just on how, you've adapted it. But again, talk to us about, now that, we're kind of, shifted with the way you're currently scaling. What did those sort of initial pain points look like that you were able to sort of, use today because it acts as a foundation?
Yeah, so when I think back to 13 years ago when I left corporate America, I was at Tishman Speyer, multi-billion dollar real estate
Yeah.
firm. I learned a lot there, but when I left, I started investing in single family homes because I didn't know that, the Rashmis and Veenas of the world could own multifamily. I thought it was only for like Oprah and Jeff Bezos, right? Like I didn't
Right.
think that I wasn't a millionaire then, right? My husband and I, we had
Sure.
good but we weren't millionaires. We were just starting out. And so I was like, oh, yeah, that's not for people like us, but it is for
Yeah.
people like us. So the
Yeah.
first thing that completely changed the way I look at everything is knowing that I can even do it. So anybody that's listening to this, you're already ahead of where I started because I just didn't know. And you're here now because obviously you know
Yeah.
that this is in a space that's intended for anybody who's willing to put in the work and the energy and the effort and take some of the risk
Yeah.
that comes. So
Yeah.
number one is knowing. Second, and this is actually a mistake I made. It's probably the biggest mistake that I made in my whole career when I'm looking backward, hindsight being
Yeah.
2020. The biggest mistake I made was not recognizing the power of community and how that could help. And it was definitely my fault, right? Because I'm a competitive person by nature. So I was ultra competitive and I thought I was living in scarcity. I was operating in like a scarcity mindset because I thought
Yeah.
if I'm gonna do this, Rush Me can't do it because there's only enough room for one of us, right? And it's especially true. Women get told this a lot, right? There's only enough room
Yeah.
for one woman at the top. And that's
Sure.
just BS, right? It's total BS. It's not true.
Yeah.
And so what I know now, because I'm in those rooms, right? Like I am in the VIP rooms at these conferences, I'm in the mastermind rooms, I have my own multi mastermind community, right? Now that
Yeah.
I'm in those rooms and I still have never paid for one of them, it was a mistake that I didn't pay for them. Now I'm invited into them because I took the scenic route to get to success. And now I have value to add to the room, right? So I speak in a lot of
Sure.
these rooms. I coach, I train in a lot of these
Yeah.
areas. What I thought back then was that paying for like a VIP ticket, like I don't need to pay for a VIP ticket. I can buy my own lunch and I can Google what NOI is. And I was
Mm-hmm.
right, I could. And now with AI, you really don't need the education piece from someone like me, right?
Right.
Like you don't need to ask me what NOI is, what's an expense ratio. ChatGPT will do that.
Of
Did that for
course.
me before chat was around.
Sure.
Now that I'm in those rooms, the reason I know that was the biggest mistake I made is
Yeah.
because I have been able to scale so much further and faster in the short amount of time that I've been in these rooms compared to when I wasn't in those rooms. It's
Yeah.
a network that exists behind the paywall. It is
Yeah.
other people who have invested into their own future. So they're heavily invested and dedicated to this mission. It's people who have connections to the other people you need. So yesterday I had something come up where I needed $1 million in cash pretty quickly, like in 2 weeks. And I called up one of my friends who I work with on some of my other businesses and I said, hey, I need $1 million. Do you or anyone you know have it? He's like, oh, I can't do it, but let me connect you to these two other people. They have it. So he connected me to those two other people. I get on a call with them
Yeah.
yesterday and they're like, oh yeah, this looks like something we can help you with. Just send over like these documents or whatever. So
Sure.
it's like having that kind of a network is
Mm-hmm.
so powerful. I think anybody would be thrilled to have multiple people they could reach out to asking for $1 million on a
Sure.
whim. It's crazy if you tell the everyday person that, but in our space, these are the people you have to know and be in contact with. And so I would say, like, understanding what the true power of webinars like this, being around leaders like you does for other people is it gives you permission to think at a bigger and a higher level. And
Yeah.
when I started, I was thinking single family until I
Hmm.
was in a room with someone who was talking about multifamily. And then I was in a room with someone who partnered with me on my first multifamily deal. So the other thing I would say to anybody trying to get started or trying to scale up is partnership, partnership, partnership. This is a team sport. This is not a
Yeah.
solo sport. This is not, like tennis, right?
Sure.
And competition for me today means I build the best team. It's I help you win, and then I can take credit for part of your win too, and that is the new win.
Sure.
I gained that perspective really by working with Rosie Noel, who's my mindset
Hmm.
coach. I work with her all the time. I love it. She's helped me grow and she's helped me expand and given me permission to be authentic.
Yeah. Oh my God. Like, let's see, if I were to unpack what you
Yeah,
just mentioned, it's right from building community. And it kind of goes not just in terms of building a community, which, I know you have Multify and you have like, the coaching and mentorship that, you quite didn't get, but now you're kind of giving back to, a community where, it's all of that learning, that's there. And the other is, obviously being able to have like that network, right?
yeah,
And the network that you're able to tap into, whether it's people who are interested in learning the business, or people who you have access to because you've been in those larger rooms.
yeah.
Do you sort of put these two different networking or community aspects of it to be a catalyst to your sort of growth in multifamily?
Yes, it was a
Yeah.
catalyst. I'm ashamed to admit that I didn't start investing into my mindset or into personal development until like 2.5 years ago.
Hmm. Yeah.
It's at two and
Yeah.
a half years. And I look
Yeah.
back and I'm like, oh my gosh, I've had so much just personal development and growth. Forget the numbers, forget the AUM, right? Just
Yeah.
personally, I show up as a better mother, a better wife, a
Hmm.
better sister, a better daughter, a better
Sure.
friend. The things that
Sure.
are actually really important to me, I'm better at now. And I show
Yeah.
up as a better leader for my team at our companies. I show up as a better leader for people that I partner with on different companies. So I'm just better now that I've invested into personal development. I think personal development has been the biggest catalyst, and anybody
Yeah.
can do that, whether you're in multifamily, single family, you're at a W-2, it doesn't matter. Everybody can use personal
100%.
development and mindset development.
Yeah, no, 100%. Um, and again, sort of going back to um, the approach of building that network,
Yeah.
given that, you only started recently, right? As compared to your 13 years of being in multifamily, talk to us a little bit of those early days and, maybe some of the struggles that, and I'm sure it sort of resonates with the audience because some of those struggles are true to, in individuals, I mean, I can talk about, things that I've gone through myself, right?
Yeah.
And until personal development came through, and I realized that, one, I'm not alone, and to the point of what you mentioned about community, so powerful, where you realize that you're not alone in this struggle, and there are others, in this, So talk to us, about what that was like.
Yeah, to say I've failed many times along the way would be the understatement statement of the century. I have made so many mistakes, errors in what I thought was the right way to build networks, what I thought was the right way to raise capital. My very first raise, I had to raise $1.2 million. We were buying a $15.9 million asset here in Dallas,
Hmm.
200 doors. You will never find that again for that cheap, right? Those were the good old days of apartment investing. But I had to raise $1.2 million and I had never raised money before. And I was like, okay, how do I raise this money. And I was like, I know what I'm going to do. And we were raising on a 506B from,
Yeah.
so that means that we can only raise from friends and family. We can't publicly solicit. So it's like a much harder hurdle than a
Yeah.
506C in some ways, because in a 506C, I can make new relationships. I can be introduced to new investors. I can't do that on a 506B.
Yeah.
So, I went out and I went to my old network, old network. I'm
Hmm.
talking like Susie from second grade math class. And I would like go on Facebook and I DM her and be like, hey, Susie, it's been a really long time since we've connected, right? Just wanted to share with you what I'm working on.
Yeah.
Your family looks so beautiful. I am buying an apartment complex. Do you want to invest $100,000? That's not a good strategy for raising capital, right?
Yeah.
She would block me, right? Or be like, okay, no, right? Like it's like this is
Yeah.
a very classic MLM tactic, right? Like people are like,
Hmm.
oh, you can have your own business and work from home, and you look like you'd be amazing selling lip
Oh,
sense or like whatever it is, right? Or Mary Kay or whatever the MLM is. So that's not a good strategy. That was a huge mistake I made. I cried myself to sleep every night for weeks because I thought I wasn't going to be able to raise the money. What I've learned since then, and these are like the big things that we do very routinely. This is a relationship game. You need to build relationship capital first. When you're building your relationship capital should be before you have a deal. Once you have a
hmm.
deal on the table, it is so much more difficult to build the trust and connection that you need to actually get an investment. And I
Yeah.
think the other big thing I see from new investors is, but I don't want to be salesy. I don't want to like sell my family and friends because that feels really uncomfortable. And I totally agree with that. I'm not a salesy person. Like, we all
Yeah.
see these like gurus and like mentors or whatever who are
Yeah.
like really aggressive with their sales
Yeah.
tactics. And no shade because a lot of them are my friends, but they approach any kind of sales, whether it's raising capital or selling whatever product or education product they have. They approach it almost from a place of scarcity and shame triggering, right? I That doesn't resonate or align with the mindset work that I've been doing. So I don't approach it that way. I approach everything, or at least try to be mindful about
Yeah.
approaching everything from a place of abundance and
Yeah.
not triggering fear. So what I mean by that, like an example would be, Rashmi, if you're not going to invest in this, how are you going to pay for your kids' college if you're not making decisions now? It's like, okay, yes, that might
Yeah.
be objectively true, but it's
Sure.
triggering, right? It's triggering fear, it's triggering scarcity, it's triggering maybe shame, right? But instead, if I come to you and I say, Rashmi, I have this really amazing opportunity I'm working on, and I'm really excited about it because of ABC, right? Like the top three
Sure.
points. And what I really love about it is I get to open this opportunity to investors like you, where you can now build generational wealth, or you can save for your kids' college fund through this. And some of our investors use that to pay for college, and you don't have to take out student loans. I think that'd be such an
Sure.
incredible opportunity. I just wanted to share it with you in case this feels right for you.
Yeah.
That's a different tone, right? Same
Sure.
message,
Yeah.
same end goal, same
Yeah.
product, different way you're messaging it.
Hmm.
And I'm not saying there's anything wrong with the first way. I just don't
Sure.
think it's as successful and it doesn't feel good for me. So I'm naturally going to shy away from doing it.
Yeah. No, I think that is, there's definitely power to that, right? Like to be able to understand, like the investor, and also for the investor to feel comfortable with the sponsor, the operator, the people that they're investing in. I think to make sure that, it is sort of a two-way street, I think is key. Um, how did you, like I love what you said earlier about not just in terms of, having your investors before the deal, um,
Mhm.
and not sort of, going to them like, earlier when you had to, and, like called every friend, from your, like quick dial.
Yeah.
Um, So talk to us about what strategies that, like you've used that has actually helped build that, where you've actually been able to align, with the investors and what they want and, be able to take those products to them.
So one, I think it is understanding what your investor's risk tolerance is. And when you have a really good understanding of that, then okay, I understand that you are completely risk averse and you want
Yeah.
zero risk. This isn't a good opportunity for you. It just doesn't align, right? Or maybe you're super aggressive and you're like, I want 100x or zero, like all the way or
Yeah.
bust. And that's fine, like a lot of 20-year-olds, like these crypto millionaires, these content creators, right? Like they have higher risk tolerance and they should, right? In my 20s, I had a higher risk tolerance too. And
Absolutely.
yeah, and so they can take different risks. So maybe this isn't the right investment for them, right? And so I think asking really qualifying questions up front so you can understand what your investors' concerns, priorities are, what keeps them up at night, what gets them excited. Understanding your
Yeah.
investor avatar is absolutely key because then you know who you're speaking to. The other
Yeah.
mistake I see investors make, right, is they don't have a strategy when raising capital. When I ask them, who are you raising capital from? They go, rich people.
Hmm.
Okay, yes, you need people who have money who can invest, but that's not a category of people, right? Like you're rich, I'm rich, Susie Smith down the street is rich, Joe Schmo is rich. Okay, but
Yeah.
maybe we all have different goals and different priorities and different ways we look at money and different things that we care about, right? And so
Um,
I think understanding who your investor you're speaking to is and crafting your message around them is really important. And it's a significant step that I and many new operators struggle with or skip altogether.
yeah, no, I think that's, there's definitely power in that. I want to pivot now a little bit into, just about, good operators, and just sort of, want to understand a little bit about your sort of core philosophy when it comes to, communicating with investors, because one is obviously bringing in the investors, right? And it's great. Like, I've been on deals where I've been, a limited partner on a deal, and, some operators are great,
Yeah.
and yet at the same time, there are others who were great just before I invested and, not so great, after, which is why for me, communication is so important,
Yeah.
the entirety of the process. So talk to us a little bit about what your core philosophy is when it comes to communicating with investors.
So I always say this: communicate, 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 communicate. And when you think you've communicated enough, double the amount of communication. And I say that because, like you, I'm invested in dozens and dozens of LP positions with other operators across asset classes.
Yeah.
There are very few that I would say are as good about investor communication as we are. Um, the other thing, especially right now, I'm seeing a lot of operators shy away from communicating because this is a hard time in the market. Interest rates are really high, cap rates are expanded, assets are not cash flowing. Many of them are in distress. A lot of them are capital calling. We're seeing assets that are being foreclosed or deed in lieu. And the reality is like this is part of the game. This is part of the risk that we take on. No one bats 1,000, right?
Yeah.
Nobody has a minus touch, and it sucks. And it's so incredibly hard to go through adverse events and to tell your investors because most of us, right? If you have like as deep of a caring for your investors as I do, it is such a grave responsibility. It keeps you up at night.
Yeah.
And what I've seen from operators is they go, oh my gosh, this is not going well. We're not going to say anything about this.
Yeah.
We don't want to worry the investors. We don't want to, I don't know, trigger a lawsuit or whatever it is,
Sure.
right? And they're operating in fear. And so they don't communicate to their investors. This,
Hmm.
I promise you, is a big mistake. You
Yeah.
want to communicate, communicate, communicate because if things do not end up going well, right? Like, and you either have a foreclosure or a deed in lieu or whatever,
Sure.
right? Or even a capital call, you never want an investor to say, but everything was fine. You didn't tell me.
Yeah.
right? You never want them to be able to say that. You always want them to be able to say, okay, we're not happy, we're disappointed, we're upset, whatever the negative emotion
Yeah.
is fine. We're not surprised by it.
Sure.
You never want them to be surprised by it. So what some of the things that we do is we do monthly communication. So we put out a monthly update. We've also started including quarterly audit reviews. So it's like very comprehensive. We put together a whole presentation. We do an annual report now.
Yeah.
We will communicate in between this communication. If you're an LP, it's a really good question to ask a potential sponsor that you're considering investing with, like, hey, what can I expect for communication after you have my money once we close?
Hmm.
We had an asset that we had to make a capital call on about a little over a year ago, and it was the first time I'd ever done it. It was really challenging. It was so hard for me to do it, and I didn't want to do it. And my JV partner and I, we put all of our available cash into it to try to avoid making a
Yeah.
capital call on it. But we ended up having to, but we had been communicating with investors. Previous to that, we had paused distributions. And when we had these major events, we picked up the phone and called every single investor in the deal. And it was a lot. It was like
Yeah.
180 plus investors. We called each and every single one. It took us about a week to do it. So first we called them to explain why we were pausing the
Hmm.
distributions. Then we call them to say, hey, this is what a capital call looks like. This is why we need it, and give them all the information about it. And then as we've gone through the process, right, we've been really transparent with the communication and we've been really upfront with it. If I ever have an investor that's like, I'm surprised by the lack of communication, which I've had it happen like twice or three times. My immediate response to them is, you have notifications turned off in your portal because I promise you, we are communicating so much. My investors are like,
Yeah.
okay, we get the picture, Veena, we got it. But you want to
Yeah.
be really clear with them and you want to give them a good picture and understanding of what's going on the asset.
Yeah, no, that's such an important point. That actually leads me into, sort of the next one, right? Especially when you're talking about, um, operators and, what's your opinion on, sort of red flags when you're working, when you're sort of, especially when you're, an investor who's sort of new to,
Yeah.
investing in new syndications, you know, what are red flags that you should immediately know that, okay, well, there's something that you need to pause,
Yeah.
or reconsider.
It's funny because I was just thinking about this the other day because I have red flags for investors too. When I first started, I couldn't afford to have red flags for investors, right? Because you just need the money that you're like, okay, it's fine, right? And those red flags are very different, right? They're
Sure.
overbearing questions, getting too far in the weeds, not allowing you to spend your time operating or doing the things you need to be doing because you have to be babysitting and hand holding them. Um, those are red flags for investors. For sponsors, red flags include not being transparent, dodging questions, or not sharing answers that you're asking about. And I don't mean like, hey, I'm not sure the answer to that. Let me get the answer and come back to you. I mean completely not answering your questions.
Mhm.
Um, one question I always like to ask a sponsor is, tell me about a time where things went wrong and what the outcome was. I'm not asking because I want you as a sponsor to tell me you've never had anything go wrong. I understand things are going to go wrong. And if you've been doing it long enough, you will have issues. So I want to know, what are the things that went wrong? What did you do to react to them? And what did you learn from it that you're not going to do it again? Those are the questions that I like to ask. I also like to ask them, what are the risks in the deal? If you have an operator that tells you, oh, there's no risk, you should absolutely run away. Do not walk, do not pass go, do not collect $200, run away, because it means one of two things. One, it means they have not thought about the risks, so therefore they've not mitigated them and they're overconfident. Or two, they are lying to you and they know the risks, or they understand that there are risks and they just don't want to tell you. That does not establish trust. I think it's a much better approach to say, okay, on asset A, the risk we see are really like market risks. National rent has softened, interest rate risk. Those are all risks that I can understand and wrap my head around and be okay with.
Yeah. Yeah, no, that's great. I think, asking those sort of questions up front, from an operator is so important to, vet them as, sort of process, part of your sort of, due diligence process as an investor is so important. So I love, some of the things that you talked about, because it's not just about the deal, because you can paint a very pretty picture, in a slide deck.
And you're
But,
going to, no
yeah.
one paints an ugly picture on the slide deck. So that's why you have to ask these questions outside of that.
Right, right. And it's those probing questions that become, important. So that's great. The other thing that I'm curious about, especially because you've got such sort of a vast, asset class when it comes to multifamily, and I'm sure sort of tenant profiles are different in these asset classes. Can you walk us through, like the types of properties that you kind of focus on? How have you sort of operationalized, your playbook, based on what kind of an asset it is, and has that sort of changed from when you started to where it is now?
It has changed. I Looking back, I today would maybe classify some of the assets we bought as more like B minus, C plus assets. Now we really are focused on those like B plus, A minus type assets. So we like nicer assets. They're just easier to manage, quite frankly. They're more institutional quality. The tenant base is a lot easier to handle. You have less issues that come up, less crime, less evictions, less bad debt, less delinquency. So we have shifted asset classes, but what I would say is we're actually kind of boring. Like all of our deals basically look like some variation of each other, meaning we have one focus. We're inch wide and a mile deep, not a mile wide and an inch deep. So we're really good in our asset class. We really understand what we need to do to pull this lever to have this outcome. And we understand that because we do one thing and we are, it's like being, if you have all these different asset classes, you're the jack of all trades and master of none. And we didn't
Mhm.
want to be that. So we try to be a master and get true mastery in our asset class.
Yeah. That's great. What have been sort of, like those challenging operational challenges that you've, experienced that you now don't actually have to deal with?
Oh, so many. So we could do a whole entire like 15 days on this and I wouldn't even be done talking about them. Look, there's always going to be challenges no matter what asset class you're operating, right? And no matter what market you're in, there's going to be challenges. And if you do enough deals, there are going to be big problems. Some of the issues that we're seeing, at least right now, is rent has softened everywhere, which has made it really tough to hit pro forma on a lot of assets. Secondly, we have seen cap rates expand because interest rates are high. So deals that maybe used to trade for 3 cap are now trading for 5.5 cap, which is unheard of when you look back at like the cycles of multifamily. It's very rare that you have more than a point of swing or expansion, even in the highest interest rate environment. So that was really unusual and I think caught a lot of people off guard. COVID, we're still seeing some of the effects from that because there were assets that were supposed to come online in 2019, 2020, 2021 that got delayed. And then in 2022, when interest rates hockey sticked, a lot of
Mhm.
that construction was either put on pause or they needed to redo their capital stack or they needed to bring in fresh debt. So there's a lot of different reasons there that in 2022 that construction either paused or slowed down a little bit. And now we're seeing some of those units just come online from last year, 2024. And it's causing issues for those of us that knew that there were assets coming online and we planned on them coming online in 22 or 21 and now they're coming online 2 3 years later. So
Yeah,
that's something that's definitely an operational struggle because those assets are offering pretty significant concessions and our national rent is already softer. So
yeah,
it's a perfect storm of everything happening at the same time. Inflation is causing a lot of our residents to not be able to afford rent as easily as they
Mhm.
used to be able to, right? And so now we're also seeing an increase in bad debt and delinquency, which we didn't used to see quite as much.
Mhm.
Collections have become a little bit more challenging. CapEx has become more expensive now with, investors hate uncertainty, and with these tariffs that are like on and then off and then on and then off, a lot of suppliers are just going, okay, we're just going to account for them because we can't plan business on a whim like this. And
Mhm.
so pricing has increased, labor has increased, so it's more expensive to get unit turns done. For example, we used to be able to renovate from to 2,500 to 5,000 for a very light lift 10 years ago. Now
Wow.
that same unit might cost me like 7,500 to 10 grand to do a lighter lift, which is
Yeah.
a big change. Insurance has gone up drastically.
Yeah.
Taxes have increased drastically. So there's a lot of different moving pieces that you have to pay attention to all of them, because any one of them can completely derail your position.
Yeah, no, 100%. We're seeing, sort of the same thing in terms of the impact of it. So
Yeah.
I want to dig a little, further into, how you've sort of built for that scale, right? How, like, especially because you're now managing multiple, properties. I mean, probably some that were acquired way before, sort
Yeah.
of this, upswing that we saw, and now we're dealing with this. Um, so what has kind of worked? Have they been early systems or processes that you kind of put in place to stay organized that, has helped grow your
Um,
portfolio and be consistent?
Yeah, so especially recently, and I know I brought up AI before. I love AI. I am very
My
much
best
an
friend.
early adapter. Yeah, I'm an early adapter of AI. We started
Yeah.
using AI in 2023 pretty significantly. Even before that, we were using different variations and functionality of it. But what I would say is one thing that's been a huge game changer, even in the last couple of years for us, is documenting every process that we have, because it allows turnover to be less painful and less expensive. So what I mean by that, anything that I do or my team does that is going to happen more than once, we use Loom. I just got they have like an AI package add-on to their software. And let's say I'm drafting investor emails and I need to format it a certain way. It's always going to be the same formatting. It's going to be done in our investor portal. So I'm going to go on my computer. I'm going to go get Loom and I'm going to start a Loom and I'm just going to talk as I'm doing the steps, right? So I'm saying, okay, then I want to go into our T12 and I want to pull this number and I want to drop it in here in the template. The template is
Yeah.
in the Google folder under this name. So I want to say all of the things out loud and I'm recording it on Loom. And then Loom has this thing where you just, click and it will create an SOP for you with like screenshots and links, and then it'll link to the video of the Loom in the library. So now you're basically creating a repository of all of your processes that if someone leaves the company or someone's out sick,
Mm.
anybody else can seamlessly come in and integrate it. We also are in process of moving all tasks that don't need to be done by a person anymore to AI platforms and getting tools and softwares to be able to do that. And I think understanding your systems and your processes is key, because then you can spot inefficiencies and increase the efficiency and the output of your team.
I love it. Love it. That is, super powerful. Um, now I just want to, talk a little bit about, especially for those investors who are listening, who want to vet operators. I know we kind of touched on some of the things earlier on, but before they invest, what I want to give them, from an operator standpoint, like how do they go about sort of managing, the deals like behind the scene? It's not just on paper, but in execution, right? So when you think about that, what does day in a life of, your not just from an operation standpoint, but Veena Jetti look like?
God.
behind the scenes.
Yeah, it depends on the day. Mostly my days are pretty boring, actually. They're spent exactly like this in front of a computer on meetings or on phone calls or researching or emails. Spreadsheets are a big part of my day-to-day life. But generally speaking, from an operational standpoint, we have really good property managers on assets. However, they are not asset managers and they don't care about your property the way you do. So it's really looking at data and getting really good at spotting inconsistencies or things that really should not be as expensive as they are, or things that are underperforming where they should be, right? Spotting those and then understanding the root of it and then pushing the property manager to make different changes. So I'm on weekly asset calls for all of, well, not all of our assets. So my JV
Sure.
partner and I, we kind of divide and conquer, right? So I sit over a portion of the portfolio. She sits over a portion of the portfolio. We have asset managers that actually run the day to day. We brought in consulting teams to help with some of the asset management stuff. And I'll say that's been a huge game changer for us. And then having really good, competent property managers, not being afraid to make swift decisions early before things get too far off track is really
Yeah.
crucial and key. But day to day, I wake up every morning that I'm home with my girls come into my room. I have 5-year-old, almost 6-year-old twins. They come into my room, they cuddle me in the mornings. We talk about what their day is going to look like. They ask me whatever questions they have. Yesterday, their questions were all around how does evolution work? And, they really want to know why monkeys were our predecessors, but why there's monkeys now. And so, I'm learning to answer a lot of questions I don't actually really know that much about. So we chat GPT and Google quite a bit. We look up TikTok videos on evolution. And, my daughter's like, so were dinosaurs around 200 million years ago? There was Pangea. Were dinosaurs here? I'm like, I don't know. I don't know these things. I haven't talked about this in years, right? But that's how I start my morning. It's my favorite part of my day. We do mindset work together. So we talk about the 3 goals we have for the day. We talk about why it's going to be a great day and just like start the day off right. Then I'll come to my office and start meetings. Usually I try to actually wait to have my first meeting after 9:30 because it gives me time to get settled in. Maybe I eat a little bit of breakfast. I get my emails cleared out. Just all the things that I need to catch up on.
Sure.
And then by 5:30 every day, I try to be mostly done from 5:30 to 7:30. So that's family time for me. And then after my kids go to bed at like 8:30, a lot of times I'll get back in front of my computer just to finish up. But a lot of my day is spent managing our managers and
Yeah.
thinking of ways and strategies for us to grow, whether it be on the asset side or the company level. I'm thinking about ways we can be more efficient. And so I'm more on the strategy now. It didn't start like that. When I started, I was everything. I was like the CEO, I was the janitor, I was the COO, I was the CMO, I did everything. Now
Yeah.
I don't have to do that quite as much, but I have to manage a lot of different teams and people.
Sure. Sure. No, that's great. I know we have 15 minutes to the hour, so I want to open it up for questions. So if there are something that the audience is curious about, definitely drop it in the chat, and we'll get to answering as many questions. But Veena, before we close, and get into that while the team is where the audience is actually going to maybe get into the questions. I wanted to find out, like, what are you working on now, given that the market is you know has its fair shares of ups and downs, and what's coming up for you in 2025 and beyond.
So a good question. I've been thinking about this a lot because I will say the amount of stress that I have gone through in the last year, I'm like, is this worth it? Is this like, why am I doing this? I do it because I'm passionate about it and I enjoy and appreciate it. I'm not ready to quit, but I have had that thought many more times in the last 12 months than I've had ever in my career. But with that being said, I think, some of the things that have been really important to me, especially as of late, is making sure that we have access for everyday people like you and I, having more
Yeah.
women at the table, having more diversity in the highest levels. And so a part of that for me means continuing with my multi mastermind, right? The
Yeah.
reason why that's so special and important to me is because it is a way for me to leave a legacy beyond money, where I've made impactful and meaningful change to an industry that has historically been the same people running it over and over and over, and creating new paths and inroads for the everyday person to reach that level. And the other project I have that I actually really love is we have a community called the Unscripted Women that I just launched it with Rosie Noel, my mindset coach. We just
Oh,
launched it,
nice.
yeah, maybe like 6 weeks ago, 5 weeks ago. It's brand new. Um, it's not only women, surprisingly. We have a lot of men that join too, but it's geared toward women.
Okay.
So it's called the Unscripted Women. But we talk about all different things outside. It's not purely multifamily. Obviously, we talk about real estate investing and multifamily, but it's more business geared, mindset geared,
Yeah.
personal development geared. Because I think those are really important. I think there's so many women that are starting businesses that don't really know the things that they want to or need to or should know. So we cover, the behavioral topics, and we cover technical topics. So our last week's call was about all about the P&L, right? We talked about what is a P&L, what are the sections, how do we interpret it, what's gross profit, what's net
Yeah.
revenue. We talk about all those things. Next week's call will be around that. And then the week after that's going to be a call around your Clifton strengths and your mindset around that and how you show up and your EQ. So we do a variety of different things, but that's something I'm very passionate about. So that's something I'm definitely going to continue doing.
Oh, that's so good. I know I've, registered for a few of them and I've not been able to, attend them because I'm actually in India right now. So,
Oh, you
uh,
are.
yeah, yeah.
Gosh,
But
okay. It's the middle of the night
anyways,
for you.
it is right now. Uh, yeah. But on a lighter note, I actually wanted to find out, if you were 13 years old today,
I don't think I
what do
could
you think?
survive. I think I could survive being 13 today.
Yeah, what would you tell your 13-year-old self?
Oh my gosh. Social media is the highlight reel of everybody's life. Um, your self-worth and your how you feel about you is the most important thing, not what other people think. I think just at that age, you're so susceptible to your peers, and you're so susceptible to all of the noise that comes from social media. And so I think it makes it really challenging when you're trying to figure it out for yourself at 13. But what the best piece of advice I got when I was young, and I wish I would have taken it to heart more, is front end load your sacrifice. You will never be younger, healthier, stronger than you are today. So this is the time for you to be making the sacrifices that future you will thank you for. And I did some of that. I wish I would have done more.
Yeah, no. Oh my God, that's 100%. I think we're all kind of in that, mode, especially as parents, to be
Yeah.
able to manage that, right?
Yeah.
So 100%. I also wanted to, and I know there's a question here, they wanted to find out what is the platform that you currently have, where they're, are they able to sign up, to that?
Uh,
For the yeah.
yeah, if I actually have a toolkit of multifamily resources that you can download. It's multimastermind.com/wealth, WEALTH. You can go there and you can download I have a kit with different handouts, downloads. Uh, Absolutely. And then if you find me on Instagram or any social media, I'm Veena Jetti on social media. I answer my own DMs on Instagram. And you can also find me in my free Facebook group, Mastering Multifamily with Veena Jetti.
Yeah, no, that's great.
So yeah.
Awesome. I wanted to also, I have a question here, which is, how do you keep your team aligned and performing across, so many moving parts, like different assets, markets, communication.
Sorry, can you repeat that? It broke up a
How do
little
you
bit. How do
keep your team aligned in
team alignment?
performing across? Yeah.
Yeah, so we do weekly, twice a week meetings, and we really set company culture from day one. So we do twice a week meetings. We call them huddles. So we huddle, we talk about anything that the team needs. We kind of hand off tasks, get answers to questions. But also too, I think when you hire the right fit for the company culture, it's better for you. And so that's something that we absolutely do a really great job of out of the gate. We also have an open door policy, so anybody can always come and ask questions, but we communicate, we're all remote and we don't work in the same location. So we all keep a lot of our communication. Slack is like our number one tool that we use.
I know that's powerful. That's awesome.
Yeah.
Yeah, well, I don't see anything else, Veena. This has, been amazing, incredible insights just about, I think there were a lot of golden nuggets with, some of the processes, your, adoption of, AI and how you use it, today. Thank you so much for being here, sharing such candid, sort of powerful insight, really, really incredible and valuable. And for all of you who've joined, thank you. If today's conversation obviously sparked like new questions, you already know how to reach out to, Veena. And if you're looking for any sort of strategic guidance or, like your next investment, we'd love to connect, share a little bit more of, the insight, really understand sort of your goals. And see if this was, multifamily is really an asset class that you guys would want to invest in. Thank you again. And
Thank
we'll
you.
see you in the next session.
Thank you. Bye.
Thanks, Veena.